Okay. So we're going to study. You don't need to study by heart how what the standard is. You just need to know how. Clear? So the standard is IAS 12 income tax. Okay, for you for FA, as far as it is concerned, you don't need to study the standards as it is. You just need to know how it is treated. Clear? Okay. And like I've told you, this is actually based upon our estimation. Understood? Okay, so what we actually perceive that presume the tax would be, we are going to estimate it, and estimation, as you know, always goes wrong, right? Okay. So in order to understand this, as far as it is concerned, in SOFP you're going to take current tax estimate. Clear? In SOPL you're going to take how much tax you have already paid. Understood?
Yes, yes.
Okay. And when it comes to taxes, there are two types of version that you get. The first version is called as that is in terms of income tax, there are three versions. Okay. Under that we have current tax estimate, which is SOFP. You have under or over provision, and we have got something called as deferred tax, which is not there in your syllabus. That is why I initially told it as a two types of tax, income tax. Clear? Or two divisions. Okay, this one you will study next in the next level. Clear? Understood? No?
Yes, 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 I understood.
Here also I'm just gonna take this off. Okay, so listen. So when there is income tax, you have an estimate and you have an under or over provision. Now, what is this under or over provision? Okay, suppose you have estimated that your tax is going to be 12,000 this year. Clear?
Okay, okay.
Okay, but you have paid actual expense of 14,000, right?
Over. We paid over.
Wait. We actually had to pay 14,000. We
Yes,
didn't
yes,
pay
yes.
over, but we had to pay that. This is the actual
Yes.
tax. This is the estimated one. Understood?
Yes, yes,
Okay.
yes.
So we should have been careful, right? Because we had taken it lower than 2,000, right?
Yes.
We have took it down by 2,000, right? So we have to increase it by 2,000. Hence, this is called as an under provision. Understood? Because we have underestimated the tax. Okay, now?
Yes, yes.
Okay, now suppose we have to pay 10,000. This is what we estimated, but the actual tax was just 8,000. Clear?
We
Here,
paid less.
here we overestimated 2,000, right? Because we took 10,000, but we actually paid only 8,000. So this 2,000 is called as over provision. Understood?
Yeah.
Okay.
I understand.
And as I told you, this tax expense is taken in SOPL, and this is current tax estimate is taken in SOFP, right? Okay, so whenever there is an under provision, it is added back. If there is an over provision, it is deducted. Understood?
Yes.
Okay, no?
Yeah, I understood.
Okay.
By transaction, I understood.
Yes.
Yeah.
Okay, so when we come in terms with the accounting transaction, what we do is we are going to take current tax under provision as sort of an increased expense, because we have under or estimated the amount, we have to take it up, right? So it is an expense, so you're going to debit it. Understood?
Yes.
Okay, clear now? Just a moment. Understood?
Yes. If it's under provision, if it's
Okay, so on 1st January 2004, okay, estimated that 31st December 2004 was 150,000, right?
yes.
In September 2005, the accountant of GB company received and paid a tax demand for 163,000. Clear? So actually what it was paid? 163. So tell me, is it under provision or over provision? Estimate is this,
Under provision.
actually paid is
Under
this. So under provision. Understood?
Under yes, yes.
This is on 31st December 2004. Okay?
Yes.
At now it is the next year. At 31st December 2005, it was estimated that the company owed 165,000. Clear? Okay? In relation to the year ended 31st December 2005. Clear now?
Right.
Okay? Prepare the tax charge and income tax payable accounts for the year ended 31st December 2004 and 2005 and detail the amounts shown in the SOFP and statement of profit and loss in both years. Okay? So we need SOFP and SOPL for both the years. Understood, no? Just a moment. Can you hear me actually?
Yeah, I'm hearing you. Very well, I'm hearing you. 1st of January. Estimated tax and 31st of December.
Okay, so we are going to open a tax liability account and a tax expenses account. Clear? Okay, so first account is a tax liability account. So in tax liability account, you have a debit side and a credit side. Tax liability is which in nature? Tax liability is group 2 in nature, right? So 150,000, that is tax expenses is 150,000. Clear? Okay, and balance carried forward 150,000. This is for the first year. Okay, this is what we calculated, right?
Yes.
Okay, and we close the accounts. Okay, but what happened when we paid in September 2005 happened, and when we tried to pay, we had to pay 163,000, right?
Yes.
Clear, no? Understood clearly?
Yes.
So,
yeah, understood.
So on the September 2005, what we actually paid by bank is how much? 163,000. Clear, no? Okay?
Yes.
Now, here we already have a balance brought forward of how much? 150,000, right? So additionally, we had to pay the under provision again, right? Okay, under provision is how much? By 13,000. Clear, no? Okay?
Yes.
Okay. Again, we estimated the tax expense for that year. That is 2005. How much did we estimate?
We estimate
165,000. Clear, no?
Yes.
Okay. So the new balance carried forward would be how much? 165,000 for next year. Understood, no?
Yes.
That is balance brought forward would be 165,000. Okay? Clear?
Yes.
Now, in the tax expense account, I'll send this and then erase it, okay? Okay, so in the tax expense account, in the tax expense account, what happened? Okay, this year you had to pay a tax payable, right? So tax liability, you had a payment of how much? 150,000, right? That is in 2004, and you have taken into P&L. Clear?
Yes.
And in 2005, we knew that we had under provision, right? So again, an under provision arose out of 13,000, right? And then again, there is tax liability, and it is how much was it? We estimated 165,000. Clear?
Right.
This much is enough. Clear? And whole is transferred to P&L. Okay, no?
Yes.
Okay.
So 150,000. This is what we paid plus under provision 13,000.
Yes.
163. And tax liability estimated 100, but we didn't pay anything.
No.
Yeah.
Okay. That is not given in the question. It would be, even if we pay, it would be next year. And then only we know whether we have calculated it wrong or correct. Clear? So I'm going to prepare
We estimate,
SOP. Yes?
we estimated 165,000. So I should put to also this one to PL.
Yeah. That is what I'm going to demonstrate now. Okay. So in SOPL tax expenses in 2004, how much did we take? 150,000, was it? Yeah. 150,000 because we didn't know, right? But in the next year we knew and we took it as 113,000 plus current year charge of 165,000. Understood?
Yeah.
That would be 178, is it?
Yes. 178,000.
Clear, no?
Yeah.
And in SOFP in 2004, that is tax liability. In 2004, how much did we estimate? 150,000. Okay.
Yes.
And in 2005, how much did we estimate? 165,000. Clear, no?
Yeah.
The movement along the tax always goes into SOPL. Just understand that. Clear? Okay. Next, I'm gonna draw that tax schedule that I have shown earlier, right? There are many ways you can do it. It is completely your choice. When in the exam they are asking you about debit and credit, do the accounting method. When they are asking about calculations, do this method. Clear, no? So
Yes.
current tax estimate in 2004, 2005. Clear? In 2004, how much did we estimate? 150,000. We are not sure if there is any under or over provision, so these are all nil. Clear? So tax expenses in 2004 is 150,000 itself. Clear, no?
Yes.
In 2005, we have 165,000 that was being predicted. Clear? That is estimated. Okay?
Yes.
And then we had an under provision, right? Of how much? 13,000. Under provision is added. So 178,000. Clear, no? This is taken in SOPL. These are taken in SOFP. Simple. Okay?
Okay.